Good morning, folks. My name is Curtis Chandler, President of PFL. We hope that everyone had a great weekend. Well, it's done, folks. The government is going to spend $1.9 trillion as it looks. A revised bill is going to hit Congress from the Senate to vote, and it looks as though Biden will sign it by Wednesday. We hope that you are enjoying our early morning podcast briefing. We are live 7 a.m. Eastern every Monday. If you are viewing this podcast through our reports and are up at 7 a.m. Eastern, please tune in next week live instead. Please like us and follow us on LinkedIn and pass on the good word. We would certainly appreciate it. And you could win a PFL model railcar. Everyone wants one of those. Our quote this week is from Jimmy Dean, who was an American country music singer, television host, actor, and businessman. He was also the creator of the Jimmy Dean sausage brand, as well as spokesman for its TV commercials. He became a national television personality starting on CBS in 1957. Jimmy once said, "I can't change the direction of the wind, but I can adjust my sails to always reach my destination." We, of course, really like this one, folks. We are like a sailboat in this ocean, what we call a world, being blown around from one direction to another. We need to adjust our sails or direction each and every day to keep on course. Great advice from Jimmy. New jobless claims in the week ending February 27th. The advanced figure for seasonally adjusted initial claims was 745,000, an increase of 9,000 from the previous week's revised total. The 4-week rolling average was 790,750. The advanced number for seasonally adjusted insured unemployment during the week of February 20th was 4,295,000 people, a decrease of 124,000 from the previous week's unrevised level of 4,419,000. The 4-week moving average was 4,448,000, a decrease of 99,000 from the previous week's unrevised average of 4,540,000 people. The Dow closed higher on Friday of last week, up 322 points, closing out the week at 31,244.00 points, up 320.63 points week over week. The S&P 500 closed higher on Friday of last week, up 42.5 points, and closing out the week at 3,851.75 points, up 40.6 points week over week. The Nasdaq closed higher on Friday of last week, up 160.25 points, closing out the week at 13,071.25 points. That indice was down 12.11 points week over week. In overnight trading, Dow futures traded lower and expected to open down roughly 70 points. Oil rallied to the highest in nearly 2 years in New York after OPEC Plus shocked markets with the decision to keep supply limited as the global economy starts to recover from a pandemic-driven slump. WTI crude oil for April delivery rose $2.26 to settle at $66.09 a barrel on Friday of last week, up $4.59 a barrel week over week. Brent crude oil for May delivery rose $2.62 to close at $69.36 a barrel on Friday of last week, up $3.23 week over week. U.S. commercial inventories increased by 21.6 million barrels week over week At 484.6 million barrels, U.S. crude inventories are approximately 3% above the 5-year average for this time of year. Total motor gasoline inventories decreased by 13.6 million barrels last week and are 3% below the 5-year average for this time of year. Finished gasoline and blending component inventories both decreased last week. Distillate fuel inventories decreased by 9.7 million barrels week over week and are 2% below the 5-year average for this time of year. Propylene and propane inventories decreased by 2.2 million barrels week over week and are 17% below the 5-year average for this time of year. Total commercial inventories decreased by 2.8 million barrels collectively last week. U.S. crude oil imports averaged 6.3 million barrels per day last week and increased by 1.7 million barrels of oil per day week over week. Over the past 4 weeks, crude oil imports averaged 5.7 million barrels per day, 12.8% less than the same 4-week period last year. Total motor gasoline imports, including both finished gasoline and gasoline blending components, last week averaged 605,000 barrels per day, and distillate fuel imports averaged 321,000 barrels per day. Oil is higher in overnight trading, and WTI is poised to open at $66.14, up 5 cents per barrel from Friday's close. Total North American rail volumes were up 2.2% year over year in week 8, resulting in year-to-date volumes that are up 1.1% year over year. 3 of AAR's 11 major traffic categories posted year-over-year increases, with the largest increase coming from intermodal, which was up 12.4%. The largest decreases came from non-metallic minerals, down 19.2%, and chemicals were down by 15.3%. North American rig count is down by 21 rigs week over week. The U.S. was up by 1 rig week over week. The U.S. currently has 403 active rigs. Canada's rig count, however, was down by 22 rigs week over week, and Canada's overall rig count is 141 active rigs. Year over year, we are down 452 rigs collectively. A few things we're keeping our eyes on, folks. Railcars in storage. The AAR just released monthly data on railcars in storage via its real-time indicators report, and as of March 1st, 2021, there were 392,500 empty railcars in storage, representing 23.7% of North America's railcar fleet. The latest numbers were 4,400 cars lower month over month as the downtrend in railcars in storage continues. Please see PFL's newly released monthly railcar storage report for a detailed analysis. U.S. Development Corp, USD, announced in a recent earnings call that its diluent recovery unit is scheduled and on budget and will be commissioned in the third quarter. The DRU project is a joint venture between Gibson and USD. ConocoPhillips has contracted for 50,000 barrels a day of space, and USD is looking to sign up others under long-term take-or-pay contracts. Crude by rail out of Canada will significantly pick up once the project comes online and is competitive with pipelines, since the final product that we like to call raw bitumen is classified as a non-Haz, and the Class 1s charge lower rates to move the product. In addition, a cheaper rail car can be used if one wants to. In other Alberta news, keep an eye on basis. If all remains equal, We think the widening of bases could lead to more conventional railcar use in Alberta. As we all know, stockpiles in Alberta are increasing. They're at 72 million barrels, up by 2 million barrels month over month, according to the energy regulator. Typically, the higher the inventories, the wider the bases, and the more rail cars move. Petroleum by rail. The 4-week rolling average for petroleum rail cars carried on North America's 6th largest American railroads fell to 24,021 from 24,415 cars week over week on the back of continued weather delays. Canadian volumes were up on better basis numbers. CP shipments rose by 25% and CN were up by 12%. U.S. railroad operators were mostly down, although UP had the largest percentage increase, up by 34.5%. We are watching the latest and greatest economic indicators. On the gross domestic product front, according to the Bureau of Economic Analysis, second estimate released on February 25th, U.S. GDP grew at an annualized rate of 4.1% in Q4. That's a slight revision from 4% a month earlier. Purchasing Managers Index, the PMI rose to 60.8 points in February of 2021, up from 58.7 in January, and matching the highest it's been in more than 16 years. Industrial output and capacity utilization. According to the Federal Reserve, total industrial production has not returned to pre-pandemic levels of early last year. In January, the indexes were about half of the market groups below their year earlier readings. Notably, weakness in the oil patch during most of this past year left energy production and raw materials down 6.2% from last year. Employment. On March 5th, the Bureau of Labor Statistics announced that net gains in February of 2021 were 379,000 people, much more than the 210,000 most economists expected. The official unemployment rate fell to 6.2% in February, down from 6.3% in January of 2021. Consumers' confidence. Not much change here, folks. The index of consumer confidence from the Conference Board edged higher in February to 91.3 from 88.9 in January. It's trended within a narrow band for 4 straight months. Consumer spending. U.S. consumer spending rose a preliminary 2.4% from December 2020 to January 2021. If it holds after the revisions, it will be the biggest month-over-month gain in 7 months, reversing declines in November and December. Spending on goods in January surged to 5.8%, and spending on services grew 0.7%. Expect spending to increase as people get their checks. Since consumer spending represents 2/3 of the U.S. economy, this is good news. Well, that's all, folks, for this week's podcast. We hope that you have a great, safe week, and we will see you next Monday. PFL has been extremely active in storage and all rail-related activities. Make sure to check our just posted reports at pflpetroleum.com or call PFL to troubleshoot or ask us any question that you may have. We hope you have a wonderful, great, and safe week. Thank you very much.